Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it overly optimistic. I stole that phrase from this title of this article about the podcast that Tracy Alloway and Jill Weisenthal had with Bridgewater's Greg Jensen. I thought it was totally appropriate. I enjoy their podcast. You might want to check it out. And so this week, what I'm going to do is I'm sharing a portion of my weekend market analysis video that I gave to my insider members on Saturday. It's usually a fairly long video, somewhere between 30 to 40 minutes, going into detail about everything in the markets. And so I'm going to share a portion of that video this weekend. And I don't do this very often, but I thought, it's the holiday weekend. Let's go ahead and do that. But before I get into it, with the overly optimistic theme, I wanted to share a couple of things that I came across in terms of tweets. And the first one is right here from Isabel Network. Let me just show that. Okay, Isabel Net, not Isabel Network, Isabel Net. And so what they're showing is a graph of the median S&P 500 short interest as a percent of market cap. Well, you can see the optimism reflected back here in 2000, and we're right at that same level now. And then here's here's pessimism, and here's extreme pessimism. So this is probably right about 2002, and then this is right about the peak, probably March 2009. And then here we are now. So I thought this was really interesting article, or interesting chart, I should say. And then the other one I wanted to share with you is this tweet by Jesse Felder. Let me put this down here. And this is from an article on Bloomberg by John Authors, and it's they're talking here about the long-term financial assets, and he's showing, as a part of the article, he's showing this chart that was created by Deutsche Bank, and I thought this is really, really interesting. Now, this is a 15-country average, and they're looking at bond and equity valuations. They go in and tell you how they did what they did, but it's really, really interesting that look at this low, 1982, and I firmly believe the bull market we've been in has been cycle wave 5 since 1982, okay? And when you look back, when is another major low that occurred? Back over here in 1920. Well, that was right before we got into the roaring 20s. And if you ever look at Professor Robert Shiller's CAPE ratio, you're going to see that 1982, the CAPE ratio had a valuation almost equal to what happened in 1920. I don't remember the exact numbers, but it's very, very close. And by the way, I did a video on this on YouTube back in January of 2018, I think. And we're talking about right here in 1920 was one of the most severe depressions that has occurred in the United States. And actually it was one of the most severe up to that time. And hardly anybody ever talks about that. Everybody talks about the Great Depression because it kind of led into World War II. But this was a very, very severe depression. And then look at the valuations that happened globally. This is, again, globally. And so now we've taken off in the markets globally since 1982 and in the United States, of course. But what really caught my eye is look how beautiful of an Elliott wave pattern there is right here. Wave 1, zigzag wave 2, strong wave 3, a running flat for wave 4 concluding in March 2009, and then a beautiful 5-wave move up to the top here, and now we're coming down. And so I thought, wow, this is really, really interesting, and it gives you a very long-term perspective. You might want to check out the article by John on Bloomberg. Okay, so without any further ado, let's dive into the weekend market analysis. Okay, here's the side-by-side picture for the Dow Industrials, the S&P 500, the Nasdaq Composite. Big, big moves to the upside. And as I said, we'd stretched this down quite a bit, And yeah, we got a big snapback, and I'll tell you what I think is going on with all of these. And I've adjusted some of this. The short term, not too bad, but the intermediate count, I guess, has tweaked a little bit. Let's look at the Dow and the Dow transports, the Dow Industrials and the transports. So after the big breakdown last week on the transports, we got a snapback, but you can see it's completely inside the previous week's range. Yes, it is an up week, and yeah, it was a big move, up 953 points. We'll see what kind of follow through we get in here. I still think this picture looks negative. I still think that these two are now in sync. All right, let's take a look at the Dow when we go back here to the moving average view. So here's what happened on Friday. The Dow was up 575 points. For the week, 1,951 points. Big, big move. All right, but when we look at the Elliott wave picture, all of the indices are going to, the preferred account is going to be blue. And here's what we're looking at. Okay, so I started to look at this, and the old count I had, we had 1, 2, but then we were getting 1, 2, 1, 2. Starting to get, I hate when I start to get more than a set of 1, 2s in here, because it just seems like something else is, and I've mentioned this before, that I always feel like when that starts to happen, like something else is going on, and here's the something else. This is what I think is going on right now. I think we are still trying to finish minute wave 2 of the third minor wave. So what's going on is we're getting a bounce similar to the type of bounce that we got in the second wave in March. You could see how strong that was. And when you look at some of the indicators, you're going to see how we're getting a similar type move in here. So I don't think we're done yet on the move back to complete wave 2 in here. And let's just drill down and let me show you where I think we are. You could see some of the retracements that we're looking at. Okay, so let's just look at C versus A. I think we have a flat going on for wave 2, and I've talked about that. Okay, the picture just seems really clear in here. So now I need a 5-wave move. I don't think we have the 5-wave move complete yet. I'm looking at the 130-minute view. So there's two things, right, that I'm looking at from a retracement perspective. C versus A, and 2 versus 1. So notice how when you look for a clustering right here at the 50% on 2 versus 1, and up here at the 200% on C versus A. Now that's stretching a C wave quite a bit, but I'm just not seeing that maybe even the third wave in here is finished yet. And here's what I'm talking about. I think we have 1, 2, and I'm looking for a 5-wave impulsive move for wave 3. And I'm just not seeing it. Not quite yet. I think we're getting close. And then we're going to get a 4th wave pullback that should be more of a choppy sideways. And it may not be all that long. So here's 65-minute view, right? So at most, we're talking 1, 2, 3, 5 hours, 5 to 6 hours maybe, something like that for the sideways. And then we get one more move up to complete. So that's where I think we are with the Dow Industrials. Let me go back to the moving average view, and we'll take a look at the S&P 500. Okay, here's the SPX. SPX was up 100 points on Friday, 257 for the week. So again, very, very strong move going on in here. And actually, I'm showing you the daily and intraday. And here's what I wanted to show you is the weekly. And of course, we already saw the weekly, but here's the side-by-side weekly and the daily. Okay, so up 100 and up 257 for the week. So that's the picture there. Now we're going to go to the blue. We're going to have all of these on the same analysis. So just to stop the confusion of going back and forth, here's where we're at. 1, 2, and 1, 2. So this wave, new wave 1, I believe, did not finish until here on May 12th. Okay, nice wave count, plays out, makes sense. I look at the measurements of all, wave threes. I don't see any violations of wave 3 being the shortest wave, etc. And now we've got this wave 2 that is still trying to complete in here and finish. What's interesting about this is that you're looking at one of the possible targets is the high for wave 4, the prior wave 4 of 1 lower degree. That is right there. Now that's a pretty good stretch. So let's drill down. That's another 200% stretch. And here's what I'm looking at when I do that. Okay, so here is B, A, B, C. I'm looking for a 5-wave move. Again, this is the 130 minute. So if we had to look at a target, this to me would be almost a worst case that we stretched this far up to 43.08, 43.07. We'll see what happens, because when we drill down in here, again, I'm not quite seeing, I don't think we have 3 waves complete. So we may have more to go to the upside in here. So that is the picture. Now, in terms of, taking this same picture and this same analysis over to the SPY and the Qs, I'm going to do that in the Trade Ideas video tomorrow on Sunday afternoon. So that's when I'm going to have that out. Okay, so right now I'm going to stick with the major indices. And then when we talk about trade ideas, we want to make sure I'm looking at those two for sure, and most likely IWM also. All right, so let's go back, and we'll go back to the moving average view. And I want to go to the daily, weekly, and we're going to pull up the Nasdaq Composite. Okay, here's the Nasdaq Composite, up 390 points. Wow, big, big move. I think it was like over 3% on Friday. And 776 points for the week. And you can see the candle on here on the weekly view. So big snapback, but still pretty compressed, pretty a big, strong move to the downside in here. And, let's just take a look at the Elliott wave picture. Again, I'm going to have this all on the blue analysis. And here's what I'm doing. I now look at this and believe that this is wave 1, same timing as on the other indices that I just talked about, wave 1. And now we're fleshing out a wave 2. And what I like about this is because of the strength, and the strength you're going to see in some of these indicators, the overbought, and especially the McClellan Oscillator, it just makes sense that we have a wave 2 that's still trying to finish and kind of in sync with this March rally that was in the minor wave 2. So that's what I think is going on. And here's the picture with the percentage moves and retracements. Let's just go look at the 130 minute. Okay, so here's C versus A again. And where is that taking us? And here's the prior wave 4, 1 lower degree. Okay. And then here's 2 versus 1. So here's where 50% lines up. Here's where 38% lines up with 161.8. So again, there's no, we don't have to pull back this far by any means. We could easily just pull back, do 161.8%. The key that I'm looking for is 5 waves. That is the key. I've got to see 5 waves in here in the C wave to finish off this flat. Okay. Now, when we look at IWM, you're going to see it's a zigzag. Okay. This is a flat. And so right now, we have 1, 2. I don't think we have the 3rd wave finished yet. And then we're going to get a 4th wave and then a 5th wave. And again, this is just a path forward. This is where I'm thinking, let's just move it over a little bit to give it a little more aligned. And once I get these kind of finished, then we can do kind of a channel projection and see how that plays out. It might give us an idea where wave 4 would finish, etc. But this is the picture on the Nasdaq Composite also. Okay, so here's where we are. And, this move down, I mean, it got a little confusing. There was no doubt. I mean, it's just the market sometimes, sometimes it's kind of like this morning. I just sat down with a cup of coffee early and we started looking at this and I was like, okay, this is what is the most clear to me. And sometimes it's just like all of a sudden, your vision, and all of a sudden you just see something much clearer than you did before. And this is where I think we're at. And I feel a high degree of confidence that this is what's going on with all three of these. Now, let's go back to the moving average view, and I'm going to switch over and take a look at the Russell 2000. Okay, here's IWM, and it was up 4.9 on Friday, 11.6 for the week. Big, strong moves. Big, strong moves here, Wednesday, Thursday, Friday. Okay, so again, Elliott wave picture. Boy, I sure don't need all that noise on the weekly. Let's just go to the daily. So don't worry about that right now. I'll clean that up. And this goes down here. So again, minute wave 2 of minor 3. Okay, so we're all kind of in sync right now. A little bit different patterns though going on. Slightly, like the Dow is a little bit different. But when I look at this wave 2, here's where it's a little bit different than the previous 3. This is a zigzag because this wave B did not come down here and retrace 90% of wave A. So now when I look at this from a zigzag perspective, then here's the bogeys I've got in here for a zigzag. So we've already gone where equality between C wave and A being equal right here at 185.73. So my next targets are 138.2, 161.8. And it's interesting again how, when you start looking at the relationships, the Fibonacci relationships, how they then line up with potential resistance that would come in right back up here at the top of wave 4. Okay. Again, we're looking for a 5-wave move because what a zigzag is a 5-3-5. Just like the flat is a 3-3-5, the zigzag is now a 5-3-5. So the C wave, that's where you have the similarities. The C wave is always a 5-wave move. It's just that sometimes it can be an ending diagonal, sometimes it can be impulse. I am working on the assumption that it's an impulse because that's the way it's looking to me right now. Let's go and take a look at the 65-minute view. So again, this is what we look at when we go down a little bit further in the detail. And again, 1, 2, I just don't think the third wave is finished yet. And so then we'll have 3, 4, and 5. And I wouldn't be surprised at all to see it punch all the way up into here, especially given the kind of momentum, seeing what's happened in the market and with the indicators. Okay, so that is the picture on the major indices. Let's take a look at our indicators. Okay, here's the VIX down 1.78. Clearly, it's going to be breaking down. If we could continue movement to the upside to complete these patterns I just talked about on the indices, this will continue to pull back. I mean, it's just, to me, there's no doubt. We've got the moving average cross. I thought maybe we would be continuing to chop sideways. That just doesn't look like it's going to be what's happening. 25.72. Let's take a look at the put to call ratio. And that is right here. And look at the low put buying. Only 48 puts for every 100 calls on Friday. But that 10-day is still up in the 70s, at least as of right now. It's at 0.70. So again, no extreme reading, no extreme bottom. We're not getting any kind of capitulation whatsoever. And when we look at the McClellan oscillator, they are stretching this rubber band. Look at where we are now. Plus 349.5. So say plus 350. We haven't had a reading like this since April of 2020, coming off that major bottom. Okay, so yeah, this is pretty stretched. But my caution, if you want to start to think, okay, is this a kickoff to some new leg in the bull market? I don't think it is. Given everything that's going on, everything that's happening, the whole setting that we have in place, I just don't believe it is. And when I go back and looked at 2007 down to 2009, there were several times on bear rallies where we got readings well up over 300, plus 300 on the McClellan oscillator. So this could just be one of those, sucker punches that they're just trying to suck in all of the diehard dip buyers and say, oh yeah, it's getting ready. We're going to another leg higher on the bull market. So that's where we're at. We'll see what happens. The summation index is turned up. Let me move over a little bit to get it. We're not back above zero at this point, but we've clearly, excuse me, we've clearly rounded back up to the upside. Okay, so that is the McClellan oscillator. The percent of stocks above their 200-day moving average. Yep, we've rallied back up. We're sitting at 37.4% on the S&P 500. It looks like we're about to get a little bit of a moving average cross. When did we get that last time? Got a little cross here in March. When was that? Wave 2. Where are we right now? Wave 2 of wave 3. Wave 2 of minor 3. This was minor 2. So, could this stretch a little bit more? Yeah. Do I think we had capitulation down here? Nope. I just don't think we did. Not on the S&P 500. Okay, so that's where we're at with that indicator. The TRIN, short-term trading index, it's not giving us anything. Are we getting a cluster of closings above the level 2? Nope. We closed 0.82. The 10-day is at 1.12. No extreme readings from that perspective. When we look at the high-low, look where we're at on the New York Stock Exchange. There were actually 53 more new 52-week highs than lows on the day on Friday. But look at this. This is since the first of the year right here. The vicious down move in January. Did we get back and have a 1 day of positive? Yep. February, vicious move down, back up early March, got positive. Another thrust down, got back up, went positive, up and down for a little bit. So yeah, we've gotten quite a bit of a history of pulling back up, very short-term wise, and then heading south again. So I'm not going to put too much into that, except that's where we are. And then when you look at the Nasdaq is still negative. So here's the picture on the Nasdaq. And you could see in March, it got up and edged slightly positive. So as we continue to pull back up a little bit more, complete new wave 2 of minor 3, yeah, could we get up here and get slightly positive again? Yes. Okay, but this is where we're at on the Nasdaq and the New York, on the net, on the high lows. All right, that's the indicator picture. Let's take a look at our interest rates. Okay, that concludes the excerpt from my weekend market analysis for Saturday, May 28th, and where I talked about the indices and the indicators. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great rest of the holiday weekend and a great week. We'll talk to you on the next video.